Welcome back to Cash Flow. Wall Street faces a historic shakeup as General Motors heads into bankruptcy. But some analysts say markets could still advance if the economic data signals the worst of the recession has passed. Some of the events to watch out for this week: Federal Reserve Chairman Ben Bernanke, his address to U.S. Congress on Wednesday. Investors will be looking for signals of the Fed's plans on the recent surge in the supply of U.S. government debt. And of course, May's non-farm payroll data. It's due on Friday. Economists expect unemployment to rise to 9.2% in May from 8.9% the month before. On Friday, U.S. stocks capped a winning month, finishing firmly in the positive. As you can see, the Dow higher by over 1%, the S&P up 1.4%, and the Nasdaq also finishing in the plus column. Asia markets today continuing with that three-month rally across the board, as you can see there. Graham Bibby is CEO of Richmond Asset Management. He is joining us from our studios in Hong Kong. And Graham thinks that all of this is the buying opportunity of a lifetime. Graham, jump in here and fill us in on why you're so bullish.
Well, as you know, we've been bullish since February, March, and we've been screaming on programs like this saying, come on, the trend's reversed, now we've got to get into these markets. I think the worst call is up about 30%. So what's happening now is on dips, the more sophisticated investors are buying. The man in the street is firmly not in this. And on the up days, especially last week, we saw volume increasing. So I think it's all good news. I mean, you know, General Motors is filing for bankruptcy, and there's this little hooray in the market. So that's telling me bad news has been discounted, and this market's set to go much higher. Now, whether it's a prolonged multi-year bull market, that's another thing. But I think there's still legs on this thing, and potentially another 20% upside, even if this were to be a bear trap.
Graham, I want to believe you. I really do. But allow me to play devil's advocate here for a moment. What about that unemployment rate in the United States? You've got so many economies across the globe still plugged into the U.S. consumer as their main source of energy. And we could, on Friday, see unemployment in the U.S. go over 9%. How can you base a rally on that?
Well, the market action is telling you that's what's happening. Okay, we've got 9%, we might have 10%, we might even have 12% unemployment, but that means we'll have 88% employment. Everyone at the moment seems to be focused on historical US data, what happened in previous bear markets, but let me tell you, the world has changed. We've now obviously got China, we've got India, we've got Russia, we've got whatever. There are a lot of advancements on new energy. That's growing at a rate of 30 to 50% per annum. There's new jobs being created in those areas. And all I can tell you is, you know, that we followed trends. In 2008, we were out of the markets, and it wasn't until March of this year we went in. On the dips, people are buying everything from emerging markets to silver to gold, fertilizer stocks. There's so many opportunities out there right now. I mean, I've been in this business 30 years, and I've never seen so many opportunities.
And Graham, I'm looking through some of your buy picks: silver, gold, fertilizer, uranium, financials, semiconductors. Why not oil?
Oil stocks at the moment don't seem to be there on a momentum basis. Silver and gold, we were in that earlier on. We came out and then we went back in 3 or 4 weeks ago. That's probably an inflation story. Fertilizer stocks, quarter after quarter, their profits have been shooting the lights out. They've got a lot of cash. There's still this global need for food. Uranium is all about clean energy, and if any of your viewers search on the web for nuclear power, they'll see there's a massive expansion going to go on there. Financials, you have to be picky. We like things like Goldman Sachs and BlackRock. But again, I look back to 1990, similar situation to now. The financials were bankrupt. Citibank was bankrupt. It went to $1 something. 7 years later, it was $51. So, okay, you can make money in bull markets. Unfortunately, most people invest near the top. But fortunes are made in these scenarios right now. But you have to know how to follow those trends and how to protect yourself with stop losses. And at the moment, on every dip, it's another buying opportunity just now.
And Graham, what are the volumes looking like in this rally? Because some critics have said that they're just not there.
Well, the masses aren't involved, let's put it that way. You have to look at the volume in relation to recent volume, not historical volume. So what we're seeing last week, which was very encouraging, was on the up days, the volume did increase substantially. I mean, almost as bullish as it could get. At the moment, the US is still, you know, wagging the rest of the world. I think that will slightly change. I think emerging markets credit will get improved, enhanced. while Western world credit is getting devalued, if you like, we still have that shift of wealth going across to Asia. So, you know, the emerging markets look really, really good, really, really strong still now. I know most people are ignoring me in February and March, but we're still going up. There are companies with huge cash amounts on the balance sheets, with high dividends, with good profits. Everything went down in 2008. That's why there's so many buying opportunities.
Graham, thank you so much for joining us today. A lot of investors out there are saying, I hope he's right. I hope he's right on the money with this one. Graham Bibby of Richmond Asset Management joining us live from our studio.